Hello everyone, today I will be discussing deferral adjustments, accrual adjustments, and dividends, and I'd like to begin this discussion with a few definitions. First, adjustments are entries made at the end of every accounting period to report revenues and expenses in the proper period and assets and liabilities at appropriate amounts. And this is because we have to use our accrual basis accounting, which requires revenues to be reported when earned and expenses to be reported when incurred. And deferral adjustments occur when a revenue or expense has been postponed, and accrual adjustments occur when a company has earned a revenue or incurred an expense, but has not yet recorded it because cash will not be received or paid until a later period. And I will now demonstrate some journal entries for some deferral adjustments. So supplies expense is often done as a deferral adjustment because making a journal entry every time supplies are used would be tedious, and it's calculated by using this equation: beginning supplies plus purchased supplies minus ending supplies equals supplies used, or supplies expense. So now I will make the adjusting journal entry for supplies expense. And I'm going to say that $3,000 worth of supplies were used. So the adjusting journal entry would be a debit to supplies expense for $3,000 and a credit to supplies for $3,000. And by doing the adjustment at the end of the period, it really cuts down on the amount of journal entries we have to make, since making a journal entry every time supplies are used would be very tedious. Now, the next journal entry I'd like to show is paying rent. Now, rent is usually prepaid, but it still is an expense that's incurred every period, so it needs to be adjusted for at the end of the period. And the journal entry for this is a debit to rent expense, and I'm going to say our rent expense is $400. And then it would be a credit to prepaid rent if the rent is prepaid, which it usually is. So that's a deferral adjustment that's required at the end of the period, since the rent expense was incurred during the period and it was prepaid. But the money has to be taken out at the end of the period, and it has to be expensed, since the expense is incurred in the period. So now the next journal entry I'd like to show is depreciation. Now depreciation also occurs every period like rent, and it must be expensed for as well. Expensed when it's incurred in its period that it's incurred. So this journal entry requires a debit to depreciation expense, and I'm going to say $1,000 here, and then a credit to an account called accumulated depreciation. And that's because the depreciation was incurred, it occurred in the period, so the expense is incurred and therefore it needs to be expensed this period, just like with the rent. So now I will show some journal entries for accrual adjustments. And now oftentimes, wages to employees are not paid on the last day of the period, which means there is usually some leftover wages that went unpaid, which means the cash has not yet been paid, but the expense was incurred in the period. So these wages must be adjusted for at the end of the period. Although the cash wasn't paid to the employees, the expense is still incurred during the period. So how to do this is a debit to wages expense. And I'm going to say $2,000 here, and then a credit to wages payable. Or you could do accounts payable for each individual employee, but since we're being generic here, wages payable is fine, and it will be fine for most internal financial accounting courses. So now the next journal entry I'd like to show is interest. Now interest is incurred every period, but the cash is not necessarily paid, every period, and this is at least while a loan is taken for something of the sort where interest should have to be paid on it. So, since the interest is incurred in the period, although the cash has not yet been paid, which makes this an accrual adjustment, the interest would still have to be expensed. So how to do this is interest expense takes the debit, and I'm going to say $5,000 here. And then interest payable takes the credit. And now the last journal entry I'd like to show is income tax. Now income tax is an adjustment because you need to know the adjusted net income before income tax, and then you need to multiply that number times the income tax rate to get the income tax that is expensed during the period and that will be needing to be paid, so it would be an income tax payable also, and it would work the same way as an account payable. So the journal entry for this is income tax expense, it's the debit, and I'm going to say $10,000 here, and then income tax payable takes the credit. And now I'd also like to show a journal entry for how to pay dividends. Now companies usually pay dividends in their mature stages. They don't pay dividends when they're young or they're growing. They pay dividends after the company has been established and has been around for a long time. So the journal entry when a company pays dividends is to debit an account called dividends declared, and I'm going to say they paid $200 of dividends here. And then you simply just credit cash of the same amount of the dividend. And if you have any questions, please leave them in the comments section down below, and thank you for watching.